NASDAQ's IPO Cross is supposed to run in 1 millisecond. On May 18, 2012, at 11:11 a.m., it took 20 milliseconds, 20 minutes. In that gap, 38,000 Facebook orders disappeared into a validation loop. $500 million evaporated across the firms that submitted them. NASDAQ, running its own exchange, broke the two rules that make an order book work. Price first, then time. 9 a.m. Eastern, NASDAQ opens the pre-market book for Facebook. 2 hours of buy and sell interest piles up, no trades printing, just a queue growing. At 11:11 a.m., the IPO Cross application takes a snapshot of that queue and starts computing the opening print. One clearing price, one size, matched against every accumulated buy and sell. The calculation completes. Before the print goes out, the system checks whether any cancellations arrived during the 20 milliseconds it just spent computing. 4 cancellations arrived. It recalculated. An order book has two sides. Bids are orders to buy at a stated price or lower. Asks are orders to sell at a stated price or higher. Every order carries 3 things: price, size, and a timestamp. The matching engine sorts them by 2 rules: price first, then time. A market buy walks up the ask ladder. It fills against the lowest ask first, that is price priority. Within that ask price, if 3 limit orders are sitting at the same level, the earliest submitted fills first, that is time priority, first in, first out, a queue. The opening cross is a different algorithm. It accumulates orders over the pre-open period, computes one clearing price where aggregate buy interest equals aggregate sell interest, and executes every eligible order at that single price. Continuous trading runs on price time priority. The cross runs on batch clearing. 2 algorithms, 2 books, 1 exchange. The queue is the whole product. The validation check exists because the book state has to be consistent at the instant of the print. If cancellations arrived during the 20 milliseconds of price calculation, the number is stale. NASDAQ's design detects the stale state and recalculates, standard behavior. But Facebook was the largest IPO in exchange history by pre-open volume. Cancellations kept arriving. Every recalculation took another 20 milliseconds. During those 20 milliseconds, more cancellations came in. The cross application ran in an infinite loop for 19 minutes. Senior engineers convened a code blue call. The fix they proposed was a failover to a duplicate matching engine, with the validation check code physically removed. Force the cross to print without checking whether new cancellations had arrived. They removed the check. At 11:30, the cross printed. 38,000 marketable orders sent between 11:11 and 11:30 were not included in it. 30,000 of those sat stuck with no acknowledgement and no confirmation for over 2 hours. Confirmations reached member firms at 1:50 p.m. UBS submitted client orders during the stuck window. Getting no acknowledgement back, its system submitted them again. NASDAQ eventually filled every submission. UBS's loss, 349 million Swiss francs. Knight Capital's lost the same day, $35.4 million, 3 months before Knight's own algorithm would erase the firm in 45 minutes. Downstream, NASDAQ's own systems executed 365 Zynga orders out of price time priority. The rule the exchange enforces on every member firm every day, the exchange itself broke in one afternoon. The queue is the market.